Hey, good afternoon, everyone. So today I thought I would cover how a Mega Back Door Roth 401k works. If you're at one of the larger technology firms, you've probably heard some chatter about this over the past couple of years. I oftentimes get questions as to how is this different from a Roth 401k, and is this valuable for me in my planning, as well as some of the engineers will hit me up with how do the mechanics of this Mega Backdoor Roth work. So I figured today we'll cover that, and we'll cover the calculation in case you're more of a do-it-yourself investor or do-it-yourself planner. So how is the Mega Backdoor Roth valuable? Ultimately, if you're making great income and you're hurting for places to save on a tax-deferred basis, and you've already maxed out your typical pre-tax and Roth 401k, this is a phenomenal place where you could probably get away with saving an additional 30 grand a year roughly. Now, it's not a $30,000 tax deduction. I would conceptualize this bucket as just another Roth 401k you have access to. So the money goes in after tax, hence the name, after tax 401k, and that money gets Roth converted over to your Roth 401k. So let's jump in. I'll show you a quick example of how that works. So generally when you log into your 401k, if you're at a company with one of these benefits, you're going to have a pre-tax 401k, a Roth, sometimes called a post-tax 401k, and an after-tax 401k. And that's the impetus for today's video anyways. When you go to make the contributions into these accounts, your typical pre-tax Roth account, you're familiar with that. That's going to be a percentage of your salary or a percentage of your bonus or something like that. And then there's going to be this after-tax bucket. In the after-tax bucket, the way the mechanics work, any money you put into this account, on the back end, your company conducts what's called a Roth conversion. And if you've seen my previous video, I gave a little bit of an example as to how that works. But essentially, the money you put into the after-tax 401k, since you're not taking any tax deductions to put money in there, when your company does the Roth conversion for you, it doesn't cost you anything in taxes. Now, ideally, this Roth conversion happens pretty quick. And when you log into your 401k, you'll see a few different options that they list on how often do you want to make a Roth conversion happen, daily, monthly, weekly, whatever. I'd recommend daily just because any gains that accumulate inside this account. So let's say you put in 30 grand into this after-tax 401k and tomorrow it's worth $31,000 because you invested in something awesome. When you go to make that conversion, $1,000 will be subject to income tax because it's a gain in a after-tax 401k. And so the faster we can get the money into the Roth portion of your 401k, the better, because theoretically, if your company never did a Roth conversion for you and the money just sat and baked inside the after-tax 401k for your lifetime, when you go to take that money out in retirement, a portion of that money would be tax-free because it's what you put in, and then a portion actually would still be income taxable. And that'd be all the gain that you have not paid taxes on. You tax deferred all that gain, but at some point you have to pay the piper. So it's best practice just to get the money Roth converted as soon as possible. One piece of terminology you'll run into if you end up doing this calculation, you start Googling some things on the back end, is what's called a defined contribution limit. That is a limit that the IRS sets that basically says, here's how much you can totally put into your pre-tax, your Roth, and your after-tax all combined. An employee and an employer can't put any more than this number into those three accounts combined. That number is different depending on how old you are. If you're under the age of 50, that number is $61,000, and if you're over the age of 50, that number is going to be $67,500. The IRS allows people who are 50 and older to make a catch-up contribution of $6,500, and that's ultimately where it manifests, is how much you can put into these plans. Let's do a quick example where, let's say you're under the age of 50 and you work at a company like Microsoft where the match is 50%. We'll keep it simple and I'll give you the terminology so you can customize this if your match is different, but let's jump into an example. Again, we come back to our typical employee logging into their 401k, at Fidelity in this case, and they've got a traditional 401k, a Roth 401k, also known as a post-tax 401k, and then we have the after-tax 401k. And so the IRS says between traditional and Roth, you as the employee cannot fund any more than $20,500 for the tax year of 2022. I think last year it was 19,500, goes up on average with inflation from what I've seen. But for the tax year of 2022, if you're under the age of 50, you can't put any more than $20,500 into there. Now, and the IRS doesn't care whether you do pre-tax, traditional, Roth, post-tax, they don't care, as long as you don't put any more than $20,500 from your own salary deferral. If you're at a company like Microsoft, they're going to give you a match, and they match half. So in this example, their match is going to be $10,250. That money is going to go directly into the traditional 401k only. And that's because Microsoft isn't going to pay income taxes for you. Your employer is not going to do that. And so they're going to put it in the pre-tax account. And when you take it out in retirement, then you can pay your taxes. So those two numbers combined, plus what we just learned about with the defined contribution limit number, we're going to take the $61,000. Again, that's your defined contribution limit. That's as much as you can put into all three of these accounts combined. We're going to then back out what we put into the plan, $20,500. We're then going to back out the company match, $10,250. And whatever the delta is that's left over from that calculation, that's the number that can go into your after-tax 401k. So let's just do a quick calculation here using the calculator. We've got 61,000 minus 20,500 minus 10,250, roughly 30 grand, 30,250. So in this example, 30,250. In this example, you as the employee could fully fund your Roth 401k, get a $10,000 match, and then fully fund your after-tax 401k at 30 grand. And that money all pretty much has gone into your Roth account. And as a quick refresher, your company will then do a Roth conversion for you on the back end of that to get that money into the Roth 401k and grow that without taxes until the day that you die. Now, what if you're over the age of 50? The numbers are going to be a little bit different, but all the concepts stay the same. So again, we come back to our typical client at a major technology company that's getting a 50% match. They've got a traditional 401k, a Roth 401k, and then they have an after-tax 401k. Remember, this person's over 50, so their numbers are a little bit different. Rather than the $20,500, that's the salary deferral IRS maximum, they are going to be allowed to put in $27,000 because they get the additional $6,500 catch-up contribution. And let's say in this example, their company matches half of their $27,000. And so that would be $13,500. And remember, that's going to go into the pre-tax account, and then you can do whatever you want with this $27,000, whether it's all pre-tax or all Roth, that's up to you. Again, we calculate the after-tax 401k by taking the defined contribution limit, which if you're over the age of 50, that defined contribution limit is $67,500. We then back out the money we put in, $27,000. We then back out the company match at $13,500. And whatever the delta is between all that is the after-tax 401k contribution. And so again, coming back to the calculator here, we 67,500 minus 27,000 minus 13,500, and we've got 27 grand. Now, if your short-term memory is good, you'll know that the 27,000 is actually a smaller number than what the under 50-year-old could put into the after-tax 401k, which might seem a little bit funky, but in this example, the 50-year-old is getting a much higher match because they're also contributing much more to their salary deferral or to their traditional Roth 401k. And so the person over the age of 50 is technically contributing more to their plans. They're just getting a much higher match. And so the under 50-year-old can make up for that lack of match, if you will, by funding the after-tax 401k. But ultimately, the after-tax 401k is a function of the defined contribution limit, backing out other contributions that you or your employer have made to the plan already. So hopefully that was helpful in looking at the mechanics of how these plans work. Obviously, I'd say talk to your financial advisor if you're curious about how this might play into your specific customized financial plan. But in general, what I've found is if you were planning to save this money into a 401k, if you could, the after-tax 401k is a pretty great spot to sock away an additional $20,000, $30,000 or so on a tax-deferred basis. And odds are, if you're making enough money where that is a healthy contribution, you're probably making enough money where finding other tax deferred places to save is going to get harder and harder. And so it could be a really cool function to put some additional money there and save it for retirement. I would caution, however, that just like a normal 401k contribution, this money is essentially irrevocably contributed. There are some ways to get it back out, hardship, all that kind of stuff. But ultimately, I would say if you're planning to put money in here, plan to not touch it until you're 59 and a half or older and you're using it for retirement. So from a liquidity standpoint, this might not be the best use of 30 grand. From a tax deferral standpoint, it's a great use of 30 grand. So I just have to look at your specific situation. So if you have questions on this or comments, drop them in the chat below, send me a message, happy to help. Hopefully this was ultimately helpful. And if you have questions, just let me know. Have a good one. Bye.